All right, what's going on, everyone? This is Stock Indices here. And if you are watching this video, I gladly appreciate you spending time on my channel, seeing that it may add value to your trading, or maybe you're looking to begin a career in trading. You're looking to begin this journey of figuring out how you can achieve financial freedom for yourself in this industry. Because let's be honest here, anyone who comes into this industry is looking to make money. You know, even if you have a passion just to do this, at the end of the day, this market is to make money. And so, if you're here today, I appreciate you a lot for even clicking on this video and watching this. That's first. And yeah, so my name is Kenneth Beard. I am a stock trader, options trader, and my journey is kind of simple, kind of your average journey. Uh, I began trading in high school. I figured out about the stock market when I was a sophomore. Yeah, I was a sophomore in high school, and I know you guys probably know him because he's still active today. His name is Ricky Gutierrez, and I remember seeing him driving his GTR and his McLaren and stuff like that. And I was really young, and I just fell in love with the type of videos he made. It really motivated me to want to make more money for myself, to live that type of lifestyle. And so with that began my journey of becoming a stock trader. I figured out what it was that he was doing and what his profession was and how he made his money. And it was quite the journey. And I'm still on that journey today. And on that journey, I want to share a little bit of my journey with you all and spread my knowledge that I have uh, accumulated over the years of perfecting this craft and be able to help other people. So, you know, that's why I'm doing this at the end of the day, is to help other people and also to make more money. Because at the end of the day, let's be honest, YouTube is a moneymaker, is a business. Selling courses is a business. People can say what they want to say about it. Yeah, I want to help other people, and that's it. I don't want any money. But I'm not going to sit here and lie to you and act like this is not a marketing tactic. This is a marketing tactic. This is something to get you to watch me and see my video and potentially uh, feel that my knowledge is good enough to potentially help you, and maybe you can invest into the services that I have, and at the same time we exchange value. This is something of value. So if you like I said, if you're tuning in here today, this is just a little small video of easy steps you can take right now to become a stock trader. So let's hop straight into this. The first thing we got here is you need to find your why. A lot of people come into this profession. I'm just going to read the slide. Stock trading is not something that comes easy, and it is a profession that takes years to master. This is something that is not a get rich quick scheme whatsoever, unless you may, get in something like a GameStop, or, get in some Bitcoin, spike or something like that. You get in something that just maybe a gamma squeeze or some hyped up Wall Street bet, something like that. Maybe if you get something like that, you may get rich overnight. But even at that, you wouldn't have built the skills to maintain that riches that you earned by accident. To be consistent, though, it takes years to master. This profession is not something that you get rich doing overnight. So if you're not willing to put in the time and effort and consistency into learning this craft, then you're up for a rude awakening. And me myself, I was up for a rude awakening. I'll tell you about a story. I graduated high school and I had about $5,000 in savings, and I was like, all right, you know, I'm not doing anything else. I'm gonna be a stock trader, and I didn't have the skills needed yet. And so, me being naive, put all the money into a brokerage account, and that $5,000 I had, I kid you not, turned from, and I'm about 17 or 18 at this time. That $5,000 that I had went from $5,000 to about $200 in about the span of 2 months. I kid you not, it was one of the worst losses I've had in my life. I wanted to quit. I wanted to give up. And it was like, what the hell am I going to do? This is all I know is trading. And this is how trading is repaying me. But you can't look at it like that. You will never become successful in this field without the passion, skill, and dedication that every professional has equipped. Every professional has the dedication, the passion, and the skill needed to be consistent in this craft. It takes skill, it takes passion, it takes consistency. What is the reason that you want to do this? Find that out. Financial abundance, to quit your 9 to 5 for that extra side income, or just for fun. Your why will determine how long you stick to this journey of becoming a stock trader. So, you know, it's a couple things wrong with what I said here. What is the reason you want to do this? Is it financial abundance, to quit your 9 to 5 for extra side income? If it's for the extra side income, then you need to find something very passive. But if you're looking to be aggressive, an aggressive trader, day trader, swing trader, large size, I suggest you not do this for side income. You will lose money. Just for fun, you will lose money. No doubt. Inevitable. Your why will determine how long you stick to this journey. Why are you doing this? That is going to lead you through the long journey of trial and error that trading takes. So let's go on to the next slide. First thing you got to do when you first started trading, you know nothing. Learn technical analysis. Learning technical analysis, is key to becoming a good stock trader. You got to learn technical analysis. You got to learn, what you're looking at. Because for me, the first thing, that happened with me when I was becoming a stock trader is, I remember downloading TD Ameritrade Thinkorswim, the platform I still use to this day. I remember, downloading that for the first time. I think the first brokerage account that I ever downloaded was Robinhood. Robinhood was a little bit simple to look at. I kind of understood the whole gist of that. But then I downloaded TD Ameritrade, and it absolutely looked like the Matrix to me. I did not know what the hell I was looking at. I had no clue. I was baffled. It was like I was looking at art, but I loved it. And my passion and my desire to understand took me further into my journey. Solidly understanding chart patterns, candlesticks, formations, and key levels will allow for you to predict future price movements. Now, no price is predictable. No future price is 100% predictable. Like I said, in the next line, now your analysis will not always be 100% correct, but as long as you have some sort of plan, you will have a higher probability of success than those who simply do not understand technical analysis and blindly enter trades based off media and hyped up news about a stock. Always have confirmation to back it up. Always have confirmation to back up your plan, your strategy. You should have some sort of thing that says, if this happens in a stock, then I should be looking at this indicator to do this. Or I should be looking at this candlestick formation pattern to close above this level. Or I should be looking at this amount of volume to enter into the market. You always have to have confirmation, because that is what's going to give you your edge at the end of the day. So like I said, now your analysis will not always be 100% correct. It will not always be 100% correct. Get that out your mind, that you can be a market wizard that just knows what price is going to do. If you read the book Intelligent Investor, you know that price is random. So the best thing you could do is to have confirmation and have, trade entry signals that increase your probability of success. And if they don't work out, learn how to manage that risk. So, just to give you guys some simple things to view here of what I'm talking about here, these are some types of chart patterns that most traders go off of. So we got the double bearish top, right? So what this is essentially, looking at this first chart here, we can see that, we got a trend going up. We got a top. We hit resistance up above. We came down. We hit support. And then we came up and we double topped. And then that double top, was taken over by sellers, which then, made the selling pressure increase, pushing this stock down below this support level, and we broke down. And we continue lower. This is a chart pattern. Bearish double top. Bearish head and shoulders. This is something that is kind of more on a complicated side. It's kind of more difficult to spot out on a chart, but it's a very, very high probability setup here. And you got a shoulder here, so it's going to look like you got an uptrend into to an area of resistance, support to higher resistance, and this is the head. Come down support. This is the second shoulder here, so it's going to be this resistance here, and then up here this resistance, and then support. Or sometimes it can be kind of diagonal and go up like that. Sometimes these head and shoulders patterns can be all over the place, and you won't even recognize that it's a head and shoulders. But this is kind of how the basic one looks, and then you get the breakout below the support level below. Next one we got is a bearish rising wedge. Here we got a wedge, and we got an uptrend going into resistance, support. So it's kind of like a channel. We got a range here. We got two resistance and support levels, and they're compacting. Usually when price tightens like this, it means that there's a lot of volume fighting each other. It's a lot of buyers and sellers commingling with each other, and they're getting tighter and tighter until there's going to be an explosion to either side, either bullish or bearish. Here they're showing a bearish rising wedge. Now this can also be bullish as well. I've seen trades like this where we have a wedge going towards the upside. We're getting this upwards momentum, and then we go to the upside. So it only look like this. It doesn't only look like going to an uptrend. It can go up or down here, but where the arrow is pointing to is where the stock would essentially go to. And we're going into this wedge here. We're getting tighter and tighter. Volume is building up. That need to escape that narrowing wedge is building up until boom, we get an explosion into each side, and then you got your trade entry here. Bearish rising wedge. The next thing we have is bearish expanding triangle. Now I hardly see these, but when I do, they are quite visible. And so, here we got the same thing like this, but in the inverse. We got the wedge expanding. We got the wedge getting bigger and bigger and bigger and bigger. The range is getting bigger until we finally get a move out of the range to either side. Now, usually these type of breakouts aren't as big as these breakouts, because usually when the price is condensing and getting tighter and tighter, it's more like the effect of when you take a balloon and you push it under the water, and then it wants to come back to the surface once you let go. It's like pressure being built up in this tightening range. Here we don't have that as much, so you may get a breakout, but usually for this type of trade, I look for the break, maybe the retest of the range. So breakout, we got to pull back to that support level, and then we continue down. Or for the upside, we get a breakout, we base back down at the resistance level, and then we continue higher. Mainly because I know that this thing isn't going to shoot just like how this is showing. Maybe for this, but not for this. Depends on how you look at it. Right? So we got a bearish triple top. This is, if you look at my RUT, my RUT trade, we have 1,000 triple tops on the RUT. No, I'm just playing with you. But this is a bearish triple top when we have 1, 2, 3, and then we have a breakdown towards the downside. Now the reason why they're calling these bearish up here, and then we're calling these bullish down here, is because usually these are at overextended zones. So we can see that most of these trades are uptrending into a downtrend. Here we got these patterns, the same pattern, bearish double bottom, bearish double bottom going into a break of resistance, bearish inverted head and shoulder, downtrend to a bearish head and shoulder, shoulder, head, shoulder, into an uptrend. Bullish, what am I saying bearish? Bullish, these are all bullish, excuse me. Bullish falling wedge going into the bullish trend. So bearishness, we got the bearish downtrend here. This is the start of it. So this is like a market falling here. Each one of these are indicating that the market is falling into that uptrend. Falling, getting hot, getting more expansive here on the expanding triangle until eventually breaking out. Bullish triple bottom, downtrend until eventually breaking out. So you're really looking at channels and support and resistance. Understand support and resistance, guys. That is going to be your best friend when trading. Types of candlesticks. So these are, I guess, black and white. You can, in this case, the black would be the red, and the white we can call that green. If you're looking at a basic TD Ameritrade stock trade, stock trading platform, or whatever you're looking at. So we got the big white candle. Now this is going to be you see this in a trend, you know that you're seeing strength. This is indicating to us that we are seeing decent strength overall in that trend. You're seeing big candles like this, most likely you're on the right side. If you're on the right side, but if you see this candle, a red candle pop up on you that looks like this, this is indicating that this is almost like an engulfing candle. This is a big long candle. So this is a full, spacious. We got the for the green, we got the open down here, and we got the close up top, way far away from the close. We got the close, the open up here for the red, the open on top of the candle, and the close down here. So see one of these in your trend, you know that strength is going in that direction. We got a doji. Doji is indecisiveness, meaning that the market doesn't really know where it wants to go. It just knows that it doesn't know where it wants to go. But usually when you see this, the market's closing right where the market opened at. So indecisiveness. The market doesn't know where it wants to go. Dragonfly doji. So this is like the market opened up here at the top, and the sellers pushed it all the way down, but then it still closed up top. So the Dragonfly doji is mainly going to be a bearish signal. We got the open high. We came down, but we still closed right at where the open was. So this is showing us that sellers are coming into the market. They couldn't just yet bring it down, but we still were very, very bearish for that day at one point in time. This is the wick here. We got the gravestone doji here, and that is a bullish signal showing us that buyers stepped in that day. Now it didn't close that day, but the market came back down and it closed here, right at where the market just about opened at. So these are kind of the same thing, just inverse of each other. This is a bearish signal. This is a bullish signal. Here we got the hanging man. And so the hanging man, what this is showing us, it's kind of like the dragonfly doji, but we still, with the market closed, see we opened here, then the market pushed all the way down, and then they brought it back up, and we closed just about right here. This is a bearish candle. So even though the market closed here at one point in time, we were all the way down here. Next thing I'm looking at is a hammer. Now, hammer is going to be bullish. The hammer opened up here, came down, closed up. So this is a bullish signal, signifying to us that the market cannot hold itself down there that long, and they decided to push it back up above where we first initially opened up at. Remember that for the white candle, for the green candles, your open is going to be at the bottom of the candle, and the close is going to be at the top. So, and for the inverted hammer, we got the open here. They tried the buyers were at one point at this high, but the sellers pushed it back down. So some selling pressure pushed it back down. So this can be you can either take this as a bullish. So a lot of these candles you can take them how you want to take them. Usually I look at these, and depending on what the trend is currently doing, I'll make my assumption on what I think that candle was showing me. I'll take it for what my technical analysis is aligning up with that candle. So this inverted candle could be either bearish to you if we're at the top of an uptrend, or bullish if we're at the bottom. Inverted black hammer, same thing as this, but this is a red candle, essentially. Spinning top, this is indicating to us that it's not such a big candle here. A spinning top is most definitely some indecision going on here. We had one side, the buyers were up this, and one side, the sellers were down here, and we kind of just closed on either side. So for this is a bullish candle, we opened up at the bottom. The sellers brought us down, but we came back up and closed higher. But at one point we were this high, but we didn't close that high. We closed right here. So this is like a moderate, just normal candle. Like we were just normal today. It's kind of how I look at that candle. Shaven head. That means that we opened up here. Sellers pushed down to here, to this at the end of the wick. We came back up, and then there was no wick, meaning that we closed exactly at the highest point. So black shaven bottom, meaning that we were high at one point. We opened up here, went, they tried to push it higher, but they couldn't. We closed right where we needed to. No extra. Looking at the Marabozo, Marabuzu. What the hell? I don't even know how to say that. I'm not even gonna lie to you. I don't know how to say that. But I can already tell you what this candle means. What it means is, for the white candle, we opened up down here. We didn't go anywhere when we opened up. We stayed right there, and we took off. As the day went on, we closed exactly where we needed to. No extra. No candle wick. Meaning that there was not, the market closed exactly at this point. We didn't go higher. We didn't go lower. All right. So if you want to take a picture of this, screenshot this, all these candles, study them, understand them, and learn them. Next thing you want to do is learn the metrics. You want to learn the metrics when looking at stocks. You want to learn your stock. If you're going to be a stock investor or a trader, you're buying shares, you want to know what kind of company they are. You want to know what you're investing in. You want to know what you're trading, at least a little bit. So here's some things you may want to look up and on your own time, figure out what these things are. You got an EPS, outstanding shares, share float, PE ratios, PB ratios, short interest, net percent gain, net percent loss, bid and ask. Those are all things that you want to understand to see to help you understand what stock it is that you're looking at and understand, how good of a company they are. Stay up to date with fundamentals. Staying up to date with economic data and current headlining news will give you an advantage because knowing the details about the company you are investing in is very important because news can impact volatility in the stock and volatility uh, creates potential erratic behavior and price action. So what that means is you need to know what the stock is actually doing. So let's say you got stock, XYZ, and they have a new product. And overnight it has bad news concerning the efficiency of the product, and stock XYZ reacts negatively by dropping 10%. So, you want to know, okay, you want to be looking at what is causing this stock to move. Is there any news behind it? Is there earnings coming up? That's going to keep you in sync with the stock that you're trading in and allow you not to be so easily blindsided when there is an erratic move uh, of volatility in either direction. So stay up to date with your fundamentals. Learn how to read fundamentals. That ties in with metrics. And learn economic data. That's what I do every day before I do my daily overall market videos. I go over economic data and I go over current headlining news, and I go over those things because fundamental analysis is important to me to understand what it is that I'm investing in. Learn how to manage risk. Learning how to manage risk and understand how much you should and shouldn't allocate into each trade is a key part of surviving in the stock market. It's a key part. That's what killed me when the story I told you guys when I had my 5,000 right out of high school. That's what killed me. No risk management, not knowing how much I should allocate, how much I thought I should allocate. You should never risk more than what you can handle. So having strict rules in place to stop you from taking unnecessary risk is very important. So figure out your risk management tolerance. One trading rule I have is to never risk more than 5% in any one trade. For some people, that may be too much. You may risk 1%. It all depends on risk tolerance. How much are you willing to risk? How good do you think you really are? You think you're good enough to take that amount of risk, then go ahead and do it. If you don't and you're not comfortable with the probabilities of that trade, don't take the risk. It's all up to your discipline. You have to be disciplined in this market. It's all about your discipline. That is what is going to make you survive. Nothing else. Technical analysis, fundamental analysis, throw that all out the window. If you don't have risk management, your account will not survive. Find a brokerage account. Finding the right brokerage account for your style of trading is important to be as efficient as you want to be. This requires research and figuring out what the commissions are for different platforms, as well as tools as charting softwares that you may need for your particular style of trading. So, um, you may have a different style of trading. You may need, maybe a particular level two, or a particular chart style, or a particular indicator that one platform doesn't have. So, being familiar with multiple different brokerages and, kind of giving them all a test and seeing the reviews on all of them is very important. Some of the main four brokerages include TD Ameritrade, Thinkorswim, Tastyworks, Charles Schwab, and Robinhood. Those are kind of the most used. You look up brokerages; those are probably going to be the four ones that first come up in your face. So those, while I listed those there, I currently myself use TD Ameritrade's Thinkorswim. So I love Thinkorswim. I think you guys should check that out. And they kind of have every indicator. Only thing it's just kind of maybe the level 2, and sometimes, which I hardly have problems with, is trade field efficiency. But other than that, I get filled on my trades pretty decently, um, and I don't really have to worry about that. So as much with my style, unless you're a scalper, you may want to do something else. You may want to do light speed or something like that. So put in the consistent effort. Trading stocks takes time and a lot of consistent effort. It takes trial and error, and it takes a lot of persistence. And failure for you will take many losses. If you truly desire to become the best trader and make a career, then begin your journey now. Need I remind you, trading is not for the faint of heart, and you will 100%, 101,000% lose money. You will lose. Every trader loses money, the best of the best. So I hope you all stay motivated and continue to innovate your skills. Thank you all for watching today. This is Stock Indices, and I will see you in my next video.